Welcome to Finance Decoded. Today, you'll learn the real truth behind credit cards. Cheers, how they shape your spending, and how to avoid falling into debt.
Credit cards have become a normal part of modern life. People swipe daily without thinking about how the system works. When someone uses a credit card, the experience feels effortless. But behind this convenience is a structure most people never learn. You tap, the payment goes through, and you walk away. But this simplicity hides a deeper financial reality. Paying with cash creates an instant emotional reaction. See the money leaving, and your brain feels the cost. Credit cards remove this emotional barrier completely. Behavioral studies show people spend more with credit. Not because they want to overspend, but because credit doesn't feel like real money in the moment. This delay between spending and paying is powerful. It separates pleasure from responsibility. And this separation increases overall spending. Then the billing cycle arrives with the monthly statement. You see the total amount and feel pressure. But then you see the minimum payment and feel relief. The minimum payment looks like a solution, but it is designed to prolong debt, not reduce it. Most of the minimum payment goes toward interest, not principal. People pay month after month, but their actual debt barely shrinks. This creates the illusion of repayment. Interest grows every day you owe money. It doesn't sleep or pause. It slowly increases the balance you must repay. Many people don't realize how fast interest adds up. A purchase from months ago still grows silently. New purchases only add more layers of interest. As people get comfortable with credit, spending habits shift. Groceries, fuel, online shopping, everything goes on the card. This creates lifestyle inflation without people noticing. Lifestyle inflation means spending grows faster than income. Credit cards make this easy because payment is delayed. Small purchases accumulate into large bills. Banks earn in many ways besides interest. They earn from annual fees and late fees. They earn from processing charges and merchant fees. When someone misses a payment, the late fee increases the amount owed. That higher amount generates even more interest next month. This cycle is mathematically difficult to escape. Not because people are irresponsible, but because the structure makes repayment slow. Credit scores add another layer of pressure. Credit score reflects repayment history and utilization. One missed payment can significantly reduce the score. Lower score makes loans more expensive. It can limit financial opportunities. It can even affect rental approvals in some places. This means credit card usage affects your financial identity. It influences how banks view you. It influences what financial products you qualify for. Emotional spending is another major factor in credit card debt. People buy when stressed, bored, or influenced. Credit enables instant decisions without immediate consequence. Advertisements encourage spending through rewards and offers. Cashback and points increase swipe frequency. These incentives benefit banks more than cardholders. Even if someone stops using their card, their debt can still grow. This happens because of compound interest. Compound interest adds new interest on old interest, multiplies debt quickly over time. It turns temporary issues into long-term burdens. Debt also affects mental health. Financial stress creates anxiety and guilt. It affects sleep, relationships, and confidence. People often avoid checking statements. They fear seeing the increasing balance. They feel overwhelmed or ashamed. Credit cards become a fallback during tough times. When income is short, the card fills the gap. This dependency increases long-term debt. Without savings, emergencies force more borrowing. Borrowing increases the balance. Balance increases the interest. Credit cards themselves are not harmful. They offer convenience and protection. They help build credit when used wisely. The danger lies in misunderstanding, repayment behavior. Minimum payments delay debt reduction. High interest magnifies small mistakes. Financial experts recommend paying in full monthly. If that's not possible, pay more than minimum. Small extra payments greatly reduce interest. Tracking expenses improves awareness. It helps reduce emotional and impulsive spending. It keeps budgets realistic and controlled. Avoiding unnecessary EMEs maintains financial stability. Buying on EME reduces future income flexibility. Cash purchases keep spending controlled. Building an emergency fund is essential. It reduces dependence on credit cards in crises. It prevents long-term debt cycles. Understanding how the system works provides control. Knowledge prevents costly mistakes, helps you manage credit instead of fearing it. Credit cards are powerful financial tools. They require discipline and awareness. Used wisely, they support financial growth. Without knowledge, the same tool creates stress. It creates long-term repayment burdens, creates emotional and financial pressure. The system is designed for business, not charity. Banks profit when borrowers lack understanding. Profit grows when balances remain unpaid. Once you understand the mechanics, you change how you spend and repay. You avoid behaviors that lead to debt. This knowledge isn't taught in school. It's something people learn through experience. But learning early prevents long-term damage. Credit card is not free money. It is borrowed money with conditions. Ignoring those conditions leads to problems. Understanding interest, repayment, and spending psychology helps you make smarter choices. It protects your financial future. Financial stability isn't about income alone. It's about habits, discipline, and awareness. It's about using tools wisely. You have the ability to make informed decisions. You have the power to stay debt-free. You can use credit cards safely. Knowledge gives freedom. Awareness gives confidence. Understanding gives control. This is the truth behind credit cards. It's not fear, not exaggeration, just reality. A reality that becomes easier when you learn it.
Thanks for watching. Credit cards are powerful tools, but knowledge gives you control. Subscribe to Finance Decoded for more financial clarity.